Hi everyone. Today, instead of focusing on the security firewalls or security videos related to the Fortinet technology or FortiGate firewalls, I am doing some sort of introduction into options trading. Now, this is something I do as a side hustle, something I've been doing for a few years now. And as we are towards the end of the year, I thought I'll just cover something, exploring the two strategies I personally use to grow the accounts. Now, this is day trading versus swing trading. Now, I've been doing this for 5, 6 years now, and I've I was primarily focused on day trading, in the sense high risk, high reward, quick in and outs. Try to do, you know, leverage the options, and then try to grow account at a on a short term level, looking at the short term gains. But then I've seen, with my swing trading account, that it's less stressful and the account grew more consistently. In fact, the profit is a lot better than what I do generally in the day trading account. I mean, both account grew, you'll see, but then and two different strategies, but then the amount of gains are very different between both accounts. Now, one account, which is my Schwab slash uh, Thinkorswim trading account. It grew from roughly $60 to $5,500, which is this account. It was previously Schwab, and then Thor's Thinkorswim took over or merged, and then you can see roughly from July it went up to 10 grand, and then pretty much it's flat from October onwards. This is day trading. I'll show you something really interesting. This is swing trading. So this is from my SMSF, self-managed super fund. Quickly on SMSF. So SMSF is some sort of contribution your employers have to do as part of the employment agreement. That's a money that's set aside. It's by law they have to pay, which is towards your retirement, sort of retirement funds. You can also contribute some sort of threshold, annual threshold towards SMSF. I think the money is accessible by 55 or 57 or I don't know 61. Again, this is not financial advice. This is purely my journey, how I handled last few months slash years in terms of growing these two accounts. So SMSF for swing trading, uh, Thinkorswim is for day trading. Now look at this, the concept, the difference, a major difference. If you look from August, this day trading account after a big drop, pretty much flat, standard across that 5,000 mark. Whereas around the same time, similar sort of timelines from October, from minus 2nd October, minus 11% to what, 220% till yesterday. And this was purely swing trading. So, and less stress, less volatile. And then I pretty much got the entire, let's say, mini bull run from that point on. So you can see the amount of volatility day trading offers. Certainly, there is a high risk, high reward, but you gotta be disciplined in that. If you're not, taking the stop loss timely, then trade can go negative really hard, really fast in fraction of seconds. I'm not saying minutes. I'm saying fraction of seconds. So you got to be actively monitoring your trade if you are doing day trading. Okay, looking at uh, you know why two strategies. Now, first, it's different for you. Every trader is different. You need to align your trading approach with your risk tolerance. That's the key. You need to align your strategy with your goals and with the commitment. Time commitment, that's the key. If you have time, you can be, glued to the screen. You can monitor the charts. You can monitor the news. You can look at the volatility. Day trading is the game. No problem there. It requires time. But for me, day trading fits really well for short term. If I give an hour, hour and a half every day, yeah, it works really well. High frequency trade, I can actually monitor the market for that long, because I got my job outside to this as well. So you can capitalize on the daily volatility, whereas you need discipline and precision to achieve that. Whereas swing trading, which suits my long-term vision, long-term growth, I aim for more steadier. Look at this. Look at this steady growth from here as well. It was steady, steady drawdown, steady uptrend upward as well, steady uptrend from here on. So if I'm aiming for steadier, longer-term growth, swing trading is the way forward. Now this method is more ideal for capitalizing the broader market trend. When I say broader market trend, just on my chart, just this is to show you that I use TradingView primarily for my active trading. Um, you know, that's that's I don't use, even though E-Trade or Thinkorswim have their own charting tools, but I don't use that. I just use TradingView. Look at this now. This is what I'm saying. It's the broader market trend. So I look at 2-minute charts for the entries, 5, 15, 65-minute chart for my exits based on how the trend is, and daily chart just to do the broader market analysis. For example, Apple, let me delete this. Apple, oh, no, sorry. Yeah, is this Apple? No, Meta. 575, 2nd of December, above the EMAs. This is 8 days, 21 days EMA. That's one of the most simpler indicator you could use. If the stock is above 8 days, 21 days EMA, you look for uptrend, try to swing 2-3 months out of expiry, buy some contracts, call options. If it's below, try to buy some, short put options. In this case, I wrote this trend when it was 2nd December above that EMA, and since then I would just ride this trend. I buy some option contract 4 weeks out, 6 weeks out, 2 months out, that type of expiry. Moment it breaks below this trend, I'm out. I'm not looking at this ticker at all. I'm moving on to the next one. I'm probably going to Nvidia's. I'll probably go into CoinSpot. So that's my watch list on the side, by the way. So Apple, Amazon, AMD, key market drivers. Another semis I would look at Nvidia and MUs. A couple of Cyber, Span, and Crowd. SPY and QQQ. These are the two tickers I purely focus for my short term. The other ones are, more for swing. Look at the Nvidia chart now. See, now it's just an example. Look, it broke the 21 days EMA, and then, it just kept high, high, high lows, high highs. It probably took a dip and then went back up. So another trend. But the moment it breaks, no more trade on this. You can do short puts, but no more long calls since then. And then you wait. Once it triggers back up, you take another few days out expiry, then buy some contracts. Now, look at this. We try to go back below that 21 days, 50 days EMA, but then held back up. But it has still closed below that. So I would be cautious in buying calls here. Once it broke above that, that's when you went to calls. So simple strategy, just to decide the trend. The key is you look at the broader market trend for the swing trading, whether the short term 5 minute, 10 minutes, similar sort of entry and exit, but on the 5-minute, 15-minute chart. Whereas on the swing trading, I'm looking at daily, weekly charts. Now think of like this: as a day trading is a quick, high energy sprint, whereas swing trading is a marathon. You need patience, you need strategic planning. Both have their own pluses and minuses based on what type of goals you have. Now, look at day trading. Why? Now, this account was all about day trading. Was low starting capital. I had $60 lying in my account. I thought I'll give it a try. I'll start. That allowed me to buy some cheap contracts for SPYs and QQQs. Each contract is worth like $30, $40. You buy 2 or 3 based on how expensive the premium is or how cheap the premium is, and then you control the profits from there on. It's highly volatile. That's what you need. You need volatility, you need liquidity. Liquidity is driven. Our SPYs and QQQs are very liquid. There's tons of money every day comes in, goes out of these two ETFs. Price movements are predictable compared to the others in the short term. You can define your risk reward. when I was here dealing with 60s, I was looking at 1 is to 5, 1 is to 3, 1 is to 2, that type of risk reward ratio. But you need quick decision making. Timing is everything in day trading. You need to rely on the charts, the candlesticks, volume, some sort of support and resistance. And then, when your account grow, you reinvest the position, probably buy instead of two contracts, now you buy 10 contracts and try to grow from there on. But it has its own challenges. It requires your focus, your emotional control, very important. You need to handle the losses without panic. Oh, don't, you can't do that. No panic. Position goes down, hit your stop loss, move on, buy something else. The strategy won't work if you can't monitor the market. So that's the key. For me, I can't monitor the market more than an hour, hour and a half because of the time zone. So yeah, quick in and out. I won't go into the what I buy, what I purchase. I have a couple of positions here, open. I'll probably show you in my trading tool. So look, I got Amazon and Meta here. But yeah, that's day trading. Now, swing trading. This is with my SMSF account. Brokerage is Interactive Brokers, where this account started from 6 grand, went up to 19 grand yesterday. Why swing trading? Long-term horizon. With swing trading, I held my positions easily for 2 weeks, 3 weeks, 5 weeks, you know, longer price movements, broader price movements, and these things you see on the chart, this is noise. It becomes noise when you go into the shorter time frames. For example, like this is a 5 minute chart. All of this is a noise then. Now you don't want to deal with that. With your swing trading, you look at this in a 4 hour chart, 60-minute chart, day trading chart, daily chart, and a weekly chart. So avoid the noise, which is plenty. Believe it or not, out of what 250 odd days when the market opens, um, I think 50, 60, 70%, in fact, the market trade in the range in a year. Only probably 70, 80 days, which is like 30, 40%, market makes moves either upside or downside. That's where you make money. Rest of the consolidation, that choppiness, oh, you give money back so easily. You make money easily, like 15%, but you give 55% back very easily. So strategic planning is key. I very rarely use fundamental analysis. I just, probably look at the earnings call. Based on that, I see what's the outlook, and outlook is good. I buy 4 weeks expiry because, what's that saying? Sell the news, buy the rumor. People react when they say, "Oh, earnings are out, not up to the expectation of the market." But you look at how the future is. What do they say about future? What's coming? What's latest? What's on the horizon? And then you buy long-term expiry contracts and drive that trend. Uh, leverage, leverage with control. Now, a lot of time, few of my friends have asked why options. Uh, it gave me leverage, uh, but with proper risk management, I avoided the overexposure. So if you manage it properly, it's an unlimited growth opportunity right there. You know your risk when you buy a contract. You buy a contract for $1,000. You know that risk. Worst case scenario, that thousand can go to zero, but that thousand, when it goes in your direction, it's an endless opportunity. It can go 100,000. I'm telling you, it can go to 100,000. It can go to 2,000. Depends on how and when you take your profit. But you know your risk. The maximum you will lose is 1,000. So you try to capitalize on the trend. You don't look at the noise. You don't look at the smaller moves. You focus on the bigger trends. Bigger consolidations. Yeah, good example. I think I'll tell you Tesla. Was it Tesla? It was Tesla, I think. I read it somewhere. So, well, Tesla was in this range for quite some time. So the broader the range is, the longer the range is, whenever there is a breakout out of that range, the longer the trend would be, the longer the breakout would be. That's what, That's what the experts say. I don't know. I've learned it somewhere on the internet. Credits to, whoever said that. The longer the trade is in that, the symbol is in that range. Whenever it breaks out, upside or downside, the longer that trend would be. If it breaks down, it'll be down for some time. If it breaks above, look at this simple example. Look, I'm saying Tesla, and I'm talking Tesla and showing Nvidia. Oh, doesn't make sense. But there we go. I think that was the example I was referring to. So Tesla was in, this sort of channel, or you can say the flag. What, roughly from July to October. What, June, July, August, September, October. 4 months. What, 80 days? It was in this channel. So let's say from here, one touch, two touch, and then second touch. So when this flag breaks, the concept is it will break. When it breaks to the upside, that upside break would last longer as compared to the shorter, time frames. So that's the simple philosophy. When Tesla broke, what, 270? I think this was around election. Yeah, 5th November was election. This is 31st October. It broke 6th of November. Look at that. When it broke above, it just ran. It just ran. What is it? 283 to 436. This is a crazy. It's almost like 80% move. So that's what you try to capitalize on with swing trading. And last, tax efficiency with SMSF. With this, I pay less tax because SMSF profits are taxed at lower rate, which is a big, big plus for the long-term gains. So swing trading works well for the accounts like this, where you're not chasing quick wins. You're instead of focusing on building the wealth, which aligns perfectly with the retirement goals. Comparing the two strategies, look, a quick comparison: day, day trading requires time commitment. If you have time, you can monitor the chart, yeah, go for it, no problem. If you can take high risks and you can handle those risks for faster rewards, do that, no problem. Swing trading is slower but steadier. Emotional controls, the key, the massive one. The amount of time you'll go through that roller coaster when you are in a trade is crazy during the day trading as compared to the swing. With swing, you might be down what, 50%? Well, that's okay. You still have 3 weeks out of expiry. You'll wait. And stocks have tendency to go in that pattern. It tries to shake the weaker ones out of the market with that negative 50%, and then it ran back into the direction you wanted to run. And it run back there. So emotional control is the key. And probably last one is the scalability. Day trading works really well for smaller accounts, whereas swing trading is for the larger pools. If I have, let's say, $100,000 in another trading account, and if I want to grow that slowly, steady, I would definitely go swing trading with that. And the both strategies are effective, but it sort of cater to different kind of people, different kind of traders. If you have time, appetite for active trading, day trading. But if you need hands-off approach, swing trading is the way to go. Not, why one worked better than the other. It's about the capital base. The larger capital allows you to ride the trends and compound gains, whereas on the flip side, $60 account couldn't have grown quickly if I wouldn't have taken the risk. So imagine $60 with the swing. I couldn't even buy the option contract because generally for the swing trading, options are expensive. Pay premiums. You pay premium. You can't buy 10 weeks out SPY option with $62. So that's what you got to do. That's what the flexibility of option trading lets you pick the strategy that fits your situation the best. Wrap up. Look, both swing trading and day trading, they have helped me especially achieve these goals. And I think I forgot to highlight this. I showed you this. Look at this. October from here on, day trading account flat, not moving much. Look at this. Same period, 4th of October, negative 11% to 20%. This is swing trading. Look, that's a very, I think that's a study in itself. Just two account. I've just looked at it. Wow, yes, that's a big difference. If you want to just enjoy the thrill of day trades, trading might be the way to go. But if you're building a long-term wealth, swing trading is the way forward. Now, whatever path you choose, remember discipline and emotions. Keep your emotions in check. These are the two key factors for the success. Now, if you found this helpful, please like and subscribe. I know this is completely different to what I generally post. I do have some content during this Christmas period for the 400 product as well. I'm working on a big, uh, testing slash lab build for 40 sassy. So 40 sassy. That's I haven't done any of the 40 sassy video before, but that's what I'm aiming for, to try to put some content around that. But again, until then, happy trading. Bye.